Hello and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's episode, we're going to be analysing the gold markets and the oil markets. Last week, we saw plenty of volatility in both assets, with crude oil being rejected at $85. This was something that I did forecast. If you watch my previous episode of Commodity Watch, I said when we were trading up at $85 to watch to see whether we will get rejected, because look what happened on two previous occasions. We went and tested the full retracement of 1% and we've been rejected, and it sent us all the way down towards $80. And that's exactly what happened in the past couple of days. From Wednesday, Thursday and Friday, we have traded down towards 80 with a low down at bang on $80 a barrel. So there's definitely a money-making opportunity in crude oil. But before we get to that, I'm going to quickly analyze the gold markets, because the gold markets had a significant breakout this week. We've been trading in this downtrend. Some could argue it could be the next bull flag, which sent us on that leg higher. But we've been trading in this downward trend since August, the beginning of August 2020. So roughly 13 to 14 months. And it's been painful. It's been, it takes a lot of patience, especially for those who are bullish on gold, because it's just been, constant downtrend, lower lows. But this week we have seen that significant breakout towards the upside, and this is very exciting now for gold holders. What do I anticipate to happen here in the gold markets? Well, I just want to clarify by saying I do not currently have a position. For those who watched my previous episode, I did open a short position at the top side here because I was anticipating a rejection, which would send us down towards 1769, and that didn't happen. We got that breakout, so that triggered my stop loss. I did lose a little bit of money, which is a bit frustrating, but not to worry, because this is becoming exciting because we've had that breakout, and I do expect some volatility in the upcoming weeks, and I'm sure there'll be plenty of money-making opportunities, and that's something that we're going to get into over the next couple of minutes. So gold has broken out. We're trading just below the 50% fib retracement area, which is this dark green line here. But there's one thing that I do not like with gold at this moment in time, is if you look at the RSI on the daily, we are considered to be overbought, and it's the same with the 4 hour. If I just switch you to the 4 hour time frame, there we are, we're above 70, and same for the 1 hour. The 1 hour, okay, well the 1 hour is down at 59, so we are towards the upside of that overbought status. So what am I anticipating for gold? What will make me enter into this market is whether we see a pullback and the RSI recover and trade below that 70 area. If we can get a price down at near 60, that's an area where I would be willing to get involved, and that's why I've drawn these arrows that you can see on your chart. I am anticipating a retest of this downtrend to see whether it does hold, and of course a retest of its 38% fib level. That is a common move you do see in the markets, that when we break out of a roof, so the previous roof was of course the higher end of this downtrend that we've been trading in since the start of August 2020, and of course the 38% fib level, we got rejected on 3 separate occasions, which I will highlight for you now. There you go. You could even argue 4. You've got the first, second, third, fourth. It was also the B zone of this ABC correction, and now that we've broken out of this roof, it's very likely that we will go and back test it. That's where many traders start to get worried. They think, oh my god, it's a false breakout, but it's a very common move that you do see in the market. So I'm looking for that back test, and then this is an area, this 1830 area is where I would be willing to buy some gold and trade it up to at least a 0.5% fib level, which is all the way up at 1875. But I personally think that we will go and test this the top of this A leg on this ABC correction, because typically speaking, with the ABC correction, once you make contact with that B leg, that's when you typically see a move up towards the top of the A leg. And that's why I want to kind of take you to the Bitcoin market, because we've seen a very similar movement here with the ABC correction. If I just get the ABC tool, here we go. We had the A leg where we broke down. We had a massive move towards the downside. Then we snapped back up to the B, and then we form the C. And don't forget, when it comes to an ABC correction, the C leg has to always be lower than an A, and that's exactly what occurred. And then we did have a double bottom here from Bitcoin, and look what happened. We struggled to break above the B zone on a few occasions. If I just drag that there, we tested it once, we got rejected, which sent us down towards to form that C leg. We tested it again, and we struggled, and we nearly back tested this fib zone. And then what happened with Bitcoin? Well, if I just highlight this with a rectangle, this was your B zone. We managed to snap through this B zone, and where did we go? We went straight to the top of the A leg which was this area here. And that's what I'm looking for in the gold market. So going back to the gold markets, I'm looking for us to trade up towards the top of this A leg that we formed, which is around at 1900 to 1920 area. That is where I personally believe the gold markets are heading, but I do not want to buy at this moment in time because I believe that there's better value to be added here in the gold markets with a pullback to go and retest that. So I just wanted to come on here, do a video and just check in with you all. It's a Sunday, the markets are closed, I'm well aware of that, but I thought ahead of the new trading week, I thought it was a good idea just to come on and do a video and explain what my game plan, my strategy is with the gold markets. But I just want to make it very clear, I do not have any trades open at this moment in time in the gold market. On the crude oil, on the other hand, I do have a trade open, and if you would like to go and see that trade and understand my strategy, then you can visit my website, www.dailymarketmovements.com. It's my new streaming service. I've left a link in the description of this video, and it's this video here. If you go out to the top and click on our videos and you come down to Commodity Watch, it's the latest video that I've just posted, which was the 12th of November. I have just opened a buy position in the crude oil markets. I'm not going to tell you on this YouTube video where my take profit, stop loss and entry point was. You can go over to the streaming website though, and go and check out that video, which will let you know all those details. But crude oil, as I mentioned at the start of this video, we have been rejected from that full Fibonacci retracement level, and we've broken down towards $80. $80 being a large, a large round number, with it being 80, that should offer some support, and it has in previous trading sessions. I know that we briefly dipped down towards $78.20, but we did bounce back above $80, so it has acted like a support in the past. And what else I like about crude oil markets is that we have the 50-day EMA just below the $80 price. So even if we did break down like we did previously, we've got that 50-day EMA to offer us plenty of support. If we broke through that, of course, we'd go down to $76. But the way things are going at this moment in time, I am anticipating a move higher. I'm not going to tell you exactly where my take profit is, but there's many analysts out there calling for $100 oil going into Q1 next year, and I think it's possible. The way that energy has spiked across the UK, across the US, it is easily feasible to suggest that crude oil could be trading above $100. And what else I really like about this chart at this moment in time is look at the RSI. We've seen a massive call off. We were trading as high as 76 on the RSI, and we're now trading all the way down near 50. So this has basically recharged this chart, and we could see a significant move towards the upside with the RSI being as low as what it is. So I'm going to wrap that up for today. Thank you very much for tuning in for today's episode of Commodity Watch, where we've analyzed the gold and the crude oil markets. As I mentioned, if you'd like to understand my trading strategy and my trading signals for that crude oil trade, then please head over to my streaming service. The video is there. Go and check it out. It will likely make you some money, and the subscription fee is only $19.99. So for that very small fee, I think it's a no-brainer, as you will likely make some good money entering into that trade. But thank you very much. Please give this channel a subscribe and a thumbs up.